Two of the key players in the municipal bond credit data area have joined forces to create a platform that puts digitized and normalized charter school data at your fingertips. DPC data has aggregated, digitized, and normalized CAFRs and audited financial statements related to municipal bonds, linking this underlying credit data with the relevant QSIPs in a number of sectors. At the same time, School Improvement Partnership has aggregated, digitized, and normalized financial, academic, and operating data on every charter school borrower in 26 states. Together, through the Muni Credit Online app, high-yield Muni investors can access underlying credit data on charter schools, senior living, and a number of other sectors. No more inputting numbers pulled from the most recent audit into your firm's database. With this collaboration of DPC data and School Improvement Partnership, you can monitor and value your high-yield charter school bond portfolio with a few keystrokes. I'm Alan Wohlstetter, founder and president of School Improvement Partnership, which focuses on data transparency in the charter school sector. With me today are our four guests. First, Robert Ryan is Vice President at First Tryon Advisors. Robert's going to address the outlook of high-yield municipal bonds for charter schools in 2023, volume, interest rates, and fund flows. Ms. Yaffa Ratner is Head of Municipal Credit at Hilltop Securities, and Yaffa is going to talk about the charter school credit outlook. Our third guest, my friend Liz Sweeney, is the Chief Data Consultant at School Improvement Partnership, an MSRB board member, and she will be discussing normalizing and comparing data for charter schools through the SIP database. And then, of course, fourth, hitting cleanup, is Triet Nguyen, Vice President, Strategic Data Operations at DPC Data. And Triet will address monitoring Muni credits through DPC's Muni Credit Online app. If you have any questions, please just put them in the Q&A box in the bottom, and we'll address those questions at the end of the presentations. Robert?
Thanks very much, Alan. So I'll be going through a quick update on the financing landscape for charter school borrowers. And just to reiterate, my name is Robert Ryan. I'm a vice president here at First Tryon Advisors, and we're a registered municipal advisory firm that specializes in K through 12, and particularly public charter K through 12 financings nationwide, acting as their fiduciary to help them get the most competitive financing from lenders and investors that they can for their projects. So on the next slide, it just gives a bit of a brief overview of sort of the slides we're going to be going through today, starting from the larger, bigger picture and then narrowing down to really charter school specific metrics on issuance and, deal volume and credit rating statistics. But on the next slide, again, we're in this backdrop of, a higher than normal inflationary environment due to, fiscal and monetary policy stimulus, fighting the pandemic during the 2020 and 2021 era. And then as a result, the Fed, really clamping down on the Fed funds rates and monetary tightening in the past 2 years to fight that inflationary aspect. And you can see here, really large jumps in short-term borrowing rates due to the Fed funds increases with rate hikes all the way through 2023, with actually 3 pauses now as of last week in June, September, and November, as we're starting to see the effects of lower inflation while somehow miraculously maintaining a pretty rigorous economy in the face of all of that. And so the Fed has opened the door for hikes, probably not in December of this year, but sometime in early, 2024 or thereabouts. But the market is very much betting that that's not going to happen. And in fact, that the work that the Fed has put in on the short end of the curve will translate to the longer end of the curve, as we've sort of seen in the past 3 months, with upticks in U.S. Treasury 10-year yields pushing 5%. There was certainly a change right after this last Fed meeting in November. But expectation is that the yield curve will start to normalize sometime next year. On the next slide, we get into just sort of the main index that public charter school borrowers are looking at for their publicly offered bond, and that's MMD, or municipal market data. And the index there is really a composite of 30-year AAA municipal bonds that are issued. And so you can sort of see a large run up after that September meeting to historical highs over the past decade in that 4.5% or higher than 4.5% range on the 30-year. Slight pullback over the past week, just given the messaging from the Fed that some of their work has been accomplished by market movements. So we're sort of sitting right in that 4.3% range, but still higher than what we've seen over the past year, and certainly over the past 5 to 10 years. So expectation is that will remain elevated up and until we get further movement, both from the Fed and, on the next slide, from investors. You can see that we've had large municipal bond fund outflows starting in 2022 as investors sort of read the room, if you will, and reduced their holdings of municipal bonds, pulling their cash out of bond funds, stabilizing slightly in early 2023, but seeing pretty tepid demand thereafter, and likely a net outflow starting from Q2 into Q3 of this year again. And so we're sort of seeing a stabilization both on the supply of credit, with the Fed at least pausing on their rate hikes, but also a pause in the demand from investors as part of this. And so we're not exactly sure which one's going to budge first, but with the strong economy that we have now, we can certainly see one or the other sort of up in the air movements, either between supply or demand for municipal securities. On the next slide, digging more into those borrowing costs for the first couple months or the first half of the year, pretty steady in terms of, again, this MMD besides the past 90 days. But you'll see noticeably a convergence between your below investment grade, which is sort of your orange line here, and your unrated, so no rating at all. There was a large spread between the two in up to the first and potentially second quarter of the year, but we're actually seeing those spreads to MMD and the overall borrowing cost converge. So on average over the first half of the year, somewhere just around the 7% for unrated, somewhere around 5.75% for below investment grade, your double Bs, double B pluses, and then your minimum investment grade, triple B minus and above, staying largely within that 5% for the first half. We have seen increases, largely due to the increase in the MMD from this 3.5 to, again, that 4.3 or 4.5 most recently. So seeing, again, sort of that mid sixes for minimum investment grade, slightly higher by 75 basis points, or 50 to 75 on the below investment grade, and then certainly well into the high sevens for, again, that unrated paper. Again, somewhat of a convergence that we're seeing in spreads between unrated and below investment grade, but that's remains to be seen as credit metrics change. And I'll give that over to Yaffa later on in the call. On the next slide, again, partly because of the increase in borrowing costs, but also because there was so much demand for borrowing due to low rates in 2021 and 2022. The first half of the year in terms of issuance volume for charter schools is very low in comparison to even 21 and 2022 for the first half, rivaling effectively 2018 as the most recent year. And so we're expecting continued deal volume decline going into Q3 and Q4 of this year, and certainly nowhere near what we saw in the bumper years of 21 and 22. So hopefully that will help moderate some of the yield increases as supply of municipal or charter school paper declines due to the pressures of interest rate and yield increases. On the last slide, just getting into a little bit more about sort of the credit rating issuance of charter schools by both number of transactions and transaction volume. And again, so the majority of transactions that were completed were either, investment grade or below investment grade. So the majority had a credit rating, but there's still a sizable portion of ratings that are, or issuances that are unrated. And it'll be interesting to see with the compression of unrated yields and below investment grade rated yields, whether that, will tip over into the majority being unrated versus majority having a rating, especially as we see some of these credit enhancement in certain states like Texas tapped out earlier this year and potentially going into the rest of the year as well. But I think that this is a good segue to hand it off to Yaffa at Hilltop to talk about credit trends for charter school borrowers. Yaffa?
Yeah, thanks, Rob. That was really a great overview, and it segues really nicely into some of the concepts and thoughts that I wanted to share with the audience today. If you go to the next slide, please. Thank you so much. So Rob talked a lot about the general market volume, but I wanted to take another moment and talk about some of the information that he's discussed, but on a more micro level and what it actually means as it relates specifically to charter school and charter school credit. So if you think about the 2021 versus 2022 total municipal bond issuance between those 2 years was down about 20%. But at the same time, charter school volume between 21 and 2022 was only down about 10% to about $4 billion. But then if you look through the same data that Rob shared with respect to what's going on 3Q to 3Q, we're down about 50%. And the question that I ask analytically from a credit perspective is, what can we learn and extract from that decline that we're seeing year to date? And if you don't mind, let's go to the next slide so that we can drill a little bit more deeply into those concepts. So I'm going to take, I'm going to actually go a slide further than that, if you don't mind. Perfect. And we'll go back to that slide in just a moment. So let's think about this slide for a quick second. Let's talk about the general characteristics of a triple B minus credit. You're talking about operating revenues of about 16 million, days cash on hand of about 173, and a general average deal size of about 27.4 million. So I use that 27.4 million as a starting point for my slides on the right side. So I just said, what if I took a charter school with a net operating income of approximately $2 million, and I had them issue debt at about 3.5% cost of capital, and which is pretty consistent with what they could have executed at in about 2021 for a triple B minus type credit. And with that $2 million worth of NOI and a 30-year amortization schedule, you'd basically be at about a 137 coverage, and about 10% of your budgeted operations would be used to fund your debt service. Now, however, if you're at a 6% cost of capital, again, using some of the numbers that Rob talked about, and I will talk about in another minute, you're now looking at $2 million worth of annual debt service, and your basic coverage now is down to a 1x. So from an investor perspective, there's really very little turning radius, meaning one student less in the chair, $1 of expenses more than anticipated, you're going to have a technical default. And then the percentage of your budget allocated for debt service is gone up by about 33%. And the concept here is we already know that the charter schools are very highly levered between their recurring revenues and recurring expenses. And if we have to crowd out other expense opportunities for perhaps more teachers or more resources in the classrooms, you have less ability to effectuate a strong academic product that we know is so critically important in the charter school space. Okay, can we go back previous to that other slide? Nope, slide before. Slide, there you go. So the concept on this slide is, if I would have taken it out an extra quarter, and yes, as a lot of what Rob mentioned is the ramp up in MMD over the last month or so. But what's crazy is, and really interesting, is that your typical BA1/double B credit in the last month or so priced higher than 7%. Your Texas PSF type transactions, which ultimately have a AAA on it, priced at about 5.9%. And then I actually found an Idaho charter school that had the AA2 state enhancement program, and that one priced, in the last few weeks at a 5.95. And the point that I'm trying to make is that as rates continue to ramp up in the charter school space, the question of affordability becomes that much more important, and important from a credit perspective as well. A, because you're crowding out your other operating expenses, providing less flexibility for the charter school. And B, your actual dollars to complete a project are going much less far because of the higher interest rates. And secondly, we are hearing anecdotally from our issuer clients that over the last 18 months or so, we're seeing increases in construction costs growing by a factor of almost 40%. So if we go to the next slide now, what does this mean on a monetary default perspective? So we do understand, with a median rating of BBB minus, charter schools are considered to be a more risky asset class. However, if we compare them to senior living, or if we compare them to project finance and economic development project deals, you could clearly see from a monetary default perspective, they're barely a blip on that proverbial radar screen, with senior living in excess of $2 billion worth of monetary defaults over the last 3.75 years, and economic development projects at 1.5 billion of total monetary defaults. And here we're defining monetary defaults to be an actual loss or not payment in a scheduled principal or interest payment. And now you can see charter schools, all the way on the right side of the screen that are well under $50 million of actual monetary defaults. Just for a quick second, what's driving some of the issues in the senior living space is occupancy that's not quite at pre-COVID levels, and revenues that are not where they're supposed to be, and expenses that continue to continue to be affected by inflationary pressures, particularly wages, food, and other expenses. You look at project finance and you see some higher defaults there. Again, these guys have construction risks, performance not quite per underwriting expectations, those are two, and technology issues. Those are 2 or 3 of the key drivers that we're seeing on the defaults here. Within the charter school space, it's really, a function of academics, of financials that are not resulting in the children being in the chairs. And so clearly we are relying upon management to provide strong academics and strong financials so that we get charter renewals and that we don't have monetary defaults in the space. Let's move over to technical defaults. Next slide, please. So interesting. Next slide, please. Thank you. Perfect. So on the technical default slide, what's interesting here is a little bit more activity within the technical defaults here. What we're defining as technical defaults is debt service coverage or days cash on hand below covenanted levels. And so, it's not a surprise that as operations are challenging, we are highly levered, that there will be times in which, we don't quite have the covenants that we would like to see on the charter schools and that are ultimately incorporated into the underwriting documents. So a little bit more of an increase here when comparing to just the absolute monetary defaults. I also want to talk a little bit, MMA, Municipal Market Analytics, does a great job in terms of looking at data. And they've tracked about 190 charter school technical defaults over the last decade. And they then further capture about 24% of those impairments will actually go into default. And it tends to be about a 16-month period between the first report of a technical default and then the actual default. And this is data specifically to charter schools. And about 1% of par issued is currently affected. So what is this actually telling us? What are these data points telling us? And we can go to the next slide, please. Thank you. These are the credit risks that we need to watch for. I intentionally started with some of the comments in terms of shouting out the benchmarks that we see on a quantitative basis that S&P shared in their 2023 medians report that was based off of the 2022 data. So we all know what the days cash on hand should be, and we know what coverage should look like. However, what I'm thinking about, in addition to traditional benchmarks, is some of the qualitative elements that we really need to be very cognizant of and really be focusing on. Hilltop released a charter school outlook for 2024 on October 23rd. And if anybody needs a copy of it, please feel free to reach out to myself or Alan. We both have copies and are happy to circulate it. But one of the issues that we at Hilltop feel is very much on our radar screens is the question with respect to what do state budgets look like? We know that, state median ratings are AA. States are generally more flush with respect to operating reserves than they were going into the pandemic. However, we also know that state revenues, including sales tax and income taxes and federal taxes or federal revenues, are not going to be increasing at levels that we have seen over the last 3 or 4 years. And in this report that we released, it's also really important to note that there's been significant declines or deceleration in state aid annual growth in some important states that are important to charter schools. So, for example, Florida has a negative 10% projection between 2023 general fund revenues and 2024 expected revenues. New York is basically flat. Minnesota is down about 15%, and Texas is up about 2%. So the question that I'm going to ask, myself when I'm looking at a charter school and how it may be performing moving forward, what is the credit risk here is, what will these states do, particularly those with decelerating revenues? Will they be increasing, decreasing, or holding per pupil revenues constant? So that's a real question that we'd want to ask. And then correspondingly, will they be changing any liquidity patterns in terms of when they actually fund the revenues over to the local school if they're facing any revenue pressure? So that's the first key credit risk that I would say we need to really watch is, keeping an eye on the states. The second question that I would look at is the pressure on expenses. We all know that labor shortages continue to abound in the charter school space, and particularly in the more rural spaces. So, this is a pressure that's not going to abate in the immediate future. And in fact, Moody's put out a piece last week on labor costs, and now that article is predominantly geared to local governments, but we can't help but know that charter schools and traditional public schools are affected by the perpetuation of wage pressures in their spaces. So, what are they going to do with respect to wages, and will they be able to come to structural balance between revenues and recurring expenses when that labor cost continues to increase and there might be some flatlining of revenue growth, particularly from state aid? And finally, we need to keep an eye on other cost pressures, particularly as they relate to health and safety, campus security, and energy. Next slide, please. I also want to talk a little bit about the pressure on enrollment. And it's not just enough to say, well, Texas is net receiver of new students, and Florida is a net receiver of new students given changing migration patterns. However, we really need to look locally because, for example, the state of Texas might be receiving new students in general, but perhaps Dallas and Houston are actually losing students and the suburbs are gaining students more rapidly. So again, really focusing on the pressure with respect to enrollment as well as the location. And the most important question, can the charters attain and then ultimately retain enrollment projections? Within the governance space, there's never been more pressure on operators to be able to perform properly with respect to operations, the continued focus on structural balance and maintaining liquidity. If they don't hit those numbers, then obviously we would be super concerned because there would be questions with respect to charter renewal risk. We cannot ignore the questions of cybersecurity and making sure that they are either planning for protections within that space. And then finally, the other pressure to watch is the costs of capital. It used to be that when capital was pretty inexpensive, if you had a troubled charter school, one way of dealing with it was basically restructuring the debt and refunding it at very, very low interest rate levels. And that would be providing you another avenue to ultimately retaining success. But as we all talked about, with the higher interest rate environment, that path is really not realistic right now. And therefore, we're going to face continued challenges with respect to capital and credit. So those are my observations with respect to where the credit risks are on the charter school landscape. Alan, I will give you back the platform.
Thank you. Let me bring in Liz.
Great, thank you. And just to reiterate, if you have any questions, go ahead and type them into the Q&A box and we'll do our best to answer them. So I want to talk about the charter school data, and you heard from Yaffa and Robert about the wide variety of factors that you need to keep track of in order to understand the sector and understand risks in the sector. And that would be true whether you're a researcher or an academic or a policymaker or a capital market participant. So, I think most of the folks on the call are probably at least somewhat aware of a lot of the data challenges and data gaps in the sector. If we go to the next slide, if you want to understand how charter schools are doing across the country or even across the state, operationally, academically, financially, you need to look at a very large number of data sources in order to pull that information together. States, for the most part, collect data from charter schools, but they all have their own submission requirements and data definitions. There's a wide variety of reporting formats on the financial side, including GASB, FASB. At least in one state, there's statutory accounting. Schools need to be authorized and they need to have a valid charter. There are literally hundreds of charter authorizers in the country. So despite the fact that the sector, is one of those rare growing sectors because there's new schools opening all the time, they're largely unrated, or at least as you saw, there's a large part that's unrated or below investment grade. They do generally trade pretty infrequently, so they can be hard to value. And there can be pretty material changes in performance from year to year. So there really is a lot to keep track of in the sector, but it's hard to get your hands on all of that data because it's in so many different sources. So on the next slide, what we've done is we've gone out to hundreds of sources and pulled in all that data into one place. So state departments of education, authorizers, financial data repositories. We just gave you a couple of examples here about authorizers. In Florida, we have over 700 charter schools, and we identified 52 unique authorizers. And in that state, you need to go to each of those authorizers and ask them which schools they authorize and what the charter status is for each of them. Whereas in other states like North Carolina, there's one authorizer for all 200 schools, and you get all that information from one authorizer. So it's just to give you a feel for the challenges of bringing all this data together. And then on the financial side, with different accounting standards being used, we came up with a methodology for standardizing across different accounting methods so that you can compare side by side. So we've done that work. And on the next slide, We cover so far 26 states with almost 7,000 charter schools. It's about 90% of all the charter schools in the country. And we track the data the way people in the charter school industry track it. So they track information by school, but also by aggregations of schools, charter school networks, or charter management organizations, CMOs, or obligated groups. So we track data in all those different ways, you can find data depending on whichever aggregations of charter schools you're interested in. And again, bringing together all that data from dozens of different places so that you can understand in one place how a school is doing academically, its socioeconomic characteristics, its enrollment characteristics, its financial performance, etc. So on the next slide, this is our coverage map right now for the School Improvement Partnership database. So you may know that not every state authorizes charter schools at all. So there are a number of states here where there aren't charter schools, or at least there aren't as of now. And then there are a number of schools that have just a few charter schools and a very small number of students. So, so we focus first on the states where there's a very large number of charter schools. California comes to mind, Texas, Florida, Arizona, Colorado, Minnesota. So among those, 26 states that we cover, we have data on all the schools in each of those states, and it aggregates to 90% of all the schools, and then a number of states pending. On the next slide, I think I've covered, oh, good. Okay, well, I'll show you a couple of screenshots of the database. Very intuitive. You can use the database through this web portal. You don't need special software. It's just a login is all you need to run it. But you can use the database through this portal, or you can get an API, you can get a one-time download, you can use a portion of the database through DPC's portal, and Triet will talk about that. So there's a lot of different ways you can access and use the database. But on this, this is the landing page or browse page. You can search for schools. If you already know the name of a school or the name of an organization that you're looking for, you can search for it here. You can sort the list by, if you're just looking for freestanding schools in Michigan, you can search for that, or CMOs in Florida, you can do it that way. You can look for large schools or small schools, or those schools that are debt issuers, if you're just really interested in capital markets. On the next slide, I think I covered most of this. Again, it's the only national source of data in the charter school market that's really curated for capital markets research and policy making. So on the next slide, I'll show you a couple more screenshots. So this is a thumbnail of the kinds of information you first see when you ask to look at any particular entity. So in this case, Freedom Preparatory Academy is a school in Utah, a charter school in Utah. We tell you when the school was opened, in 2003 in this case. The length of history is an important factor for charter schools. It's a very young sector where there's a lot of startup and very new schools. So how long a school is operating is an important factor. We tell you who the authorizer is, the charter expirations, what grades they cover, the website. And in this case, if they're part of a charter management organization or network, we tell you the name of that network so you can look at that network itself if you're interested. So in this case, they are part of Freedom Prep Academy. And if you looked up Freedom Prep Academy, what you'd see is the list of schools that are part of it, including this one, and information about each of those schools, as well as some aggregated information like their total enrollment. On the next slide. So this is the kind of enrollment, socioeconomic, and academic information we get for Freedom Preparatory Academy or any school in the database. So enrollments, attendance, economically disadvantaged students. Academics is monitored differently in different states. So we have a few different ways that we can track academics depending on whether the state, for example, gives a numeric grade or a letter grade or sort of a pass-fail type of grade. So we have a few different ways that we can track academic performance depending on the state. So there's a number of quality demand statistics here, socioeconomics and academic. And on the next slide, here's the financial snapshot. So this is just highlights of the audited financial information for a school. So we provide 16 different financial metrics. So you can get a quick visual view. Is this a big school, a small school? Do they make money, lose money? Do they have a high debt burden? Are they liquid, illiquid? Do they have covenants? If they have debt service coverage or days cash covenants, we provide that here on this screen. So this is just a quick snapshot. On this screen, you can also click right through to the audit itself. So we give you a link to the audited financial statement. It's a quick, easy way to get the financials rather than searching for them on Emma. But also you can see the underlying data. You can also export full financial details, and I'll show you a piece of that. Let's go to the next slide. So this is just a piece of an export. So when you click on export, what you get is all that operating data, academic data, the charter history. You get, in this case, 5 years of audited financial data in our standardized template, again, that's standard regardless of the accounting methodology. And this is just a small piece of it, but you'll have a full balance sheet, full statement of activities, cash flows, operating leases, pension information, and about 24 standardized calculated ratios. And we're transparent around the methodology we use to standardize the data, the ratio calculations, all of it. And we give you links to the underlying financial statements. On the next slide. So this is the last feature I want to show you of the user interface. This is what we call our compare page. So if you're following a portfolio of organizations, or you want to find maybe some comparables for something that you're looking at, you can create a compare sheet here. So you can enter the names of entities. If you already know what you want to look for, you can enter them here and add them to your compare. And we give you a couple dozen different operational and financial metrics for each of those entities that's in your compare. Or you can look at, say, all the schools in one state and run a compare for all of them, or within 20 miles of a certain zip code. You can do a place-based search, and then you can export the whole thing. So just a really, really useful feature. And then the last thing I wanted to point out on the last slide is that we continuously get feedback from users, and so there's often updates and new features. And so I just wanted to highlight a couple of them. The first one and the third one here are already in place. I just showed you the ability to do a compare within a location search, or export the results of a user-defined compare. One that we're going to launch very shortly is a filter for schools that are in potential distress. You'll have the ability to filter for schools that have negative net income, low liquidity, or declining enrollment, and you could choose one or more of those to filter and get your list of schools in potential distress, so that then you can use that as a starting point for your further research. So we're going to be launching that really soon. But one of the nice things about it being a web-based portal is that when we launch these new features, you'll just see them the next time you log in. You don't have to do any downloads or anything special to get those new features. So I think the last slide has our contact information, and I wasn't going to cover all this. There's just a couple of additional bullet points that you can look at later that just give you a better sense of all of the extensive data quality and oversight that we do in order to make sure that we can pull in data from so many sources and have, you know, reasonable comparability. So let me now turn it over to Triet. He's going to talk about the DPC data product and how you can use the school improvement partnerships charter school data in their product and all the great additional features that they add to the data.
Well, thank you, Liz. Well, for those of you who don't already know DPC data, we've been around for over 30 years, so we're no flash in the pan, so to speak. We were one of the original NUMSers, you know, the Muni document repository. So you can call it EMMA before there was an EMMA. And over the years, we have grown to be a leading provider of compliance, disclosure, and data solutions for the municipal market. It's probably fair to say that our mission historically has been to collect every kind of municipal bond disclosure documents and to extract and digitize data from those documents for potential technological applications. So by now, you know, I think you've gotten a pretty good idea why we chose to feature SIP's charter school data on our platform, even though we normally would collect the data ourselves. And we've done so for over 40 subsector in the municipal marketplace, spanning over 25,000 obligors. But the charter school sector, as you've seen, is a bit of a different animal, and we thought we'd go to the sector experts for that sector. Next slide, please. So why would you choose to access the SIP data on our platform versus just going directly to SIP? It obviously depends on your use cases. If you are an investment banker, a municipal advisor, a direct lender, even somebody in public policy making, or a foundation, and you need to really get data on all the schools that SIP has collected data for, then you would go directly to SIP and have access to all the nice features that Liz just went over, right? Now, if you are an investor, an analyst, a trader, a portfolio manager, and other public finance professionals who is only concerned about the schools that have public debt outstanding, then I think, you know, you can get some additional value added through going through our platform. As Liz has mentioned before, we pass through the financial data and operating data that SIP has collected for just over 500 obligors, charter school obligors with public debt outstanding, assigned to over 2,100 debt issuers. The coverage is about the same as what SIP has. Most importantly, I think for this use case is that all bond issues are mapped to the correct bond issue obligor, be it a standalone obligor or an obligated group. And then all obligors are linked to individual securities at the CUSIP 9 level. Now, I want to say CUSIP 9, not just CUSIP 6 level. Through our platform, you can also, because we carry financial data for school districts, if you're interested, you can look up financial data for the local school districts that are related to the school that you're looking at, you know, and they could be the authorizer for the charter school or just a competing school districts. If you are a high yield player in our marketplace, the charter school data can be bundled with other high yield sectors that are available on our platform, such as healthcare, senior living, and development districts. Now, in terms of output, I think obviously we have the same options that that SIP has. You can output the data to an Excel, a CSV file format, and I will show you in a minute to even to a customizable PDF report. How do you access the data through DPC? You can get the data through a data feed. If you have access to development resources, in that case, you can just import our data into your internal applications and use it in that context. But for those of you who don't have access to development resources, and I suspect many of you don't, you can just access it to a web-based Municredit online app, which I will talk about in a minute. Next slide, please. So this is what Municredit online, a web-based Municredit online app looks like. Again, you don't need to download anything. You just have to just log into the app online, and you can see that on the left upper left corner, you can either input a partial obligor name or an actual QSIP, and then you will put up the correct obligor for your review. You can see that you can very quickly get a sense of the credit trends for the most recent 4 years. And I would note at the bottom there that there's a notes section that analysts can use to keep track of their commentaries and other research-related notes. On the upper right-hand corner, as I mentioned before, that you have a button that will allow you to export the data to Excel, and also to a customizable PDF report that actually can be customized with your own corporate logo. And I want to point out also that this is only a condensed view of all the data that we get from SIP. You can have access to the entire data template if you want. What we've done here is really select out some of the major line items that we think the majority of you would be looking at. But again, this view is also fully customizable. And we can show any line items that you're interested in. Next slide, please. Next slide, please. Okay. At the bottom of this display, what we've done also is we put together some key trends and financial ratios. So, the normal culprits. EBITDA, days cash on hand, and so on and so forth. So pretty much the standard ratios that most analysts would be looking at, and also some operating data that we get from SIP, enrollments and whatnot. Now, again, this is also fully customizable. If you have a PET ratio that you follow that is not on this list, would be happy to compute it for you and then put it in your user view, as long as it can be computed from the data that the SIP has collected, of course. Next slide, please. So, in closing, I think the message I would get from Robert's and Yaffa's presentations today, and also from Liz, is that the charter school sector really is offering some very attractive opportunities in the current higher rate environment. But it also means that you have to do a lot more due diligence given the potential credit issues that Yaffa has gone over. So I think it behooves you, to make sure you have the right data solutions to help you, screen and then monitor these charter school credits. And last but not least, I just want to point out some of our other solutions that we have for both the buy and sell sides of the market. As mentioned before, we have Muni Credit Financials can provide you comprehensive financial, pension, and climate risk data for over 25,000 Muni obligors. And the key here is we don't have any size cutoff. So we collect data for even the smallest of issuers. And of course, and we also cover many of the high yield, quote unquote, high yield sectors. Our Muni Credit Mapping is our proprietary mapping of all active issues to the correct obligors. Not an easy thing in our market, as you can imagine, because there's a lot of conduit issuance. And from there to over 100 underlying sectors, subsector combinations. And everything, as I mentioned before, is linked to the individual CUSIPs at the CUSIP 9 level. So you would know exactly where your risk is in your portfolio. And also, I think we also have a very comprehensive set of disclosure and compliance solutions. So feel free to reach out to us to know more about these products. So at this point, I'm just going to stop here and then open it up to Q&A. Alan?
Yes, Triet, we did have a number of questions come in that I wanted to, have the folks whose area it's in address. One thing, Liz, that was asked was how often the School Improvement Partnership database updates its state data, for example, and what that process looks like.
Yeah, sure. So we get data a few different ways. So we get data in an automated basis from state departments of education. We get data through manual requests that often come through in sort of a semi-bulk fashion, like a big Excel table from an authorizer, for example. And we get data manually on the financial side. So there's a lot of different methods we use to get data. The most automated piece of it is the data we typically get from state departments of education. And so, as you could probably imagine, we run scripts that pull the data from each state. And typically the states will update the entire fiscal year all at once for all schools. Not always, but we generally will like try to run the script at least once a month and see if there's new data out there to pull in. But if there's data that a user is seeing at the state level that we're not showing yet, we can always go try again and see if there's data available that we haven't pulled in yet. So it's really, the answer really varies depending on the type of data and how automated or manual that data source is. And as I'm sure you can imagine as well, some states are a little more timely than others in updating their data.
Thank you. Yaffa, I noticed in your presentation, you focused on, as you looked at the credit outlook, it may be important to focus on state education budgets, if you will. And I wonder if you're noticing a move towards, to use the term broadly, more equity in education financing, where factors and issues are, coming before the state to ensure that there is adequate funding for, historically underserved neighborhoods.
Yeah, that's a great question, Alan. And what I'd like to say is that even back in the days when I was a ratings analyst, so basically, 30 years ago, unfortunately, it's been that long, we saw various different states appealing their funding formulas for traditional schools. And then ultimately, when charter schools came onto the landscape, we've seen perpetuation of concepts that there is not fair and equitable distribution that particularly keeps in mind some of our more financially challenged or socially challenged children. So I think there's an issue that's going to continue to perpetuate on the landscape. Some states are ahead of the others. But it's one that, of course, we need to keep an eye on, especially when you juxtapose the concept that many of our charter school students are coming from more challenged socioeconomic demographics.
Exactly. That was actually one of the factors why, when, Liz and we were thinking about putting together the database for the first time a few years ago, we added the percentage of students that qualify, for example, for free and reduced lunch, because we thought that was sort of an interesting, input. I think as you say that, it makes me realize that in all these sectors, Triet, really data transparency becomes very important. And, because in fact, the only way whatever the goals are of public education are, whether it's getting your coupon paid or whether it's making sure free and reduced lunch students are educated, you can't do that without current income and and we had a question on this, Triet, that I wanted to just ask you. One of our listeners asked, did SIP and DPC partner together to produce one database? They're trying to understand sort of how everything comes through DPC online. And actually, you've matched it up to QSIPs and everything. So just to talk about that a little more, how you integrated all that.
Yeah, thank you, Alan. No, I think we basically start from the SIP's own database. And basically, what we carry is filtered a subset of that data, again, for issuers that do have public debt outstanding. Again, because our platform is completely geared toward bond investors. And so that's where the value added that we bring to the table there is. Again, that as I mentioned before, that everything is and mapped to the correct obligors and securities at the QSIP 9 level, and it's also organized in a way as you can see from the screenshot of our app is in a way that facilitates ongoing credit monitoring and then surveillance.
Absolutely. Last question, Liz, before we close. The question came up, does School Improvement Partnership ever find any errors in audited financial statements?
Yeah, so I mentioned our standardized financial template where we standardize all the financial results regardless of the accounting standard. And so in doing that standardization, you can typically run some very, basic math checks on the information that you're collecting. And we do find occasionally that, for example, the assets that they reported don't add up to total assets, or, assets minus liabilities doesn't equal change in net position, things that really, are very firm accounting rules. So we do find math errors. We have a running list right now of about 60 audits where we have found math errors, and quite often we'll notify the auditors, we'll notify the school. They will often, they'll rectify the error and reissue the financial statements. So it has, a benefit for the entire market when that happens, because they'll reissue corrected statements and re-upload them to Emma to make sure everybody gets access to that.
Thank you. Well, on behalf of all our participants, I want to thank you, Robert, Yaffa, Liz, Triet. Wonderful presentation. We'll be sending out to all the participants a link to the recording, as well as a copy of the presentation. And I know DPC Data and School Improvement Partnership would be thrilled to talk with you about a subscription. So thank you again, everyone. Thank you, Triet.
Thank you.
Thank you, Yaffa. Thank you, Liz.